Good day, students. Today we are going to talk about investments and investments. Uh, Table of content will be introduction to investment, objective of investment, investment avenues and their characteristics, three types of investments, investment avenues, and types of money market instruments, options related to equity shares, miscellaneous investment options, and practical impact. So investment may be defined as deployment of funds made with an anticipation of earning some return. Investment is also likely to be uncertain. The return on investment is variable in nature. The variability of return is we called as risk. The return and the risk associated with the return are two factors associated with any investments. So what are the objectives of investments? For any investor, the objective should be stated under maximization of return for the given level of risk and minimization of risk for the given level of return. Then third one is hedge against any inflation. Investment can be broken into three basic groups: ownership, lending, and cash equivalents. First one, money market instruments. The types of money market instruments. Traditional instruments are treasury bills, money at call and short notice, and bankers' acceptance. Modern instruments, commercial papers, repo instruments, money market mutual funds, intercorporate deposits, euro dollars. Then options related to equity shares investments. So limited partnership, private placement, dividend reinvestment plan, and DRIP, ADR, that is American Deposit Recipient, and GDR, Global Deposit Recipient, and IDR, Indian Deposit Recipient, and preferred stock and hybrid securities. Real estate as an investment option. So what are the things we need to have? Capital appreciation, risk, liquidity, convenience, then antiques, then wines and coins, gold, arts and paintings, provident fund, mutual funds, post office savings account, national savings account. So what are the practical impact? So personal finance. Myself, the private employee working for 2 years and nothing saved till now because of family monthly commitments. I have applied for a personal loan and went to make best use of it. Pay off is interest on loan. Make same saving too. What do I need to consider when purchasing life insurance? What is diversification and why it's important? How to save rupees 1 lakh. So this chart is called investment chart. So how do we read this chart is it. So first column we call it as investment, that is a green, yellow, and red and blue. So it depends upon your risk taking capacity and your return. It will be termed on this colors. So for green it will be everything will be a short term, so there will be a less return as well as less risk. Then after yellow it will be like a termed as long term, and after 1 year, so long term, but does not exist over very long term, so it will be like a 1 year bracket, and after 3 to 5 years is the third one, and last one is more than 5 years. So what are the benefits and how can we get a maximum return as well as our risk will be limited? We can go through this chart. From this conclusion, the investment avenues differ from every individual, for he or she has been different risk return perspective. The practical impact depends upon factors like age, income, risk bearing capacity, inflation rate. Investing early for sunset concept has finally dawned up to today's investors' mind. So future years, all the best. Thank you, students.